Home Depot earnings came in line. Sales missed, though. We're going to bring in one of the most accurate retail analysts, Bugatch. He is with Raymond James. He also owns shares of the home improvement retailer. But were you surprised by the sales miss?
Not really. We thought that there was a high likelihood that sales would miss, given what we had seen from suppliers' reports over the last couple of weeks, the weakening economy, and what we saw from Lowe's yesterday. So we're not surprised from that.
Does it change your opinion at all on the stock, on the growth prospects for the company?
Not markedly. I think that last year they had such a significantly good spring, and with the weather in April this year being pretty dreadful, it simply impacted this quarter. And I think the company in their outlook didn't change their outlook for sales markedly either.
No, not that we see. But just quickly here, I mean, you and I have spoken in the past about the fact that you actually watch GDP more than you watch home sales or the home market. And as you said, the company, HD, is doing the same thing. Is this the right trend to follow? Is this the right way that investors can decide whether or not to participate, to invest in Home Depot?
At least for the intermediate term, that's probably what's going to be more important for the fortunes of sales. With what's happened to the housing market over the past several years, housing or new housing has become relatively less important, and more important has been the overall health of the economy. And so with expectations for the economy actually falling since the end of last year, I think that it's reasonable to see this on the sales.
So
the company's done a great job, by the way, in controlling expenses, which is why they made at least our number.
So given the outlook for the U.S. economy, then would you just avoid adding to your holdings then for Home Depot?
We became more cautious on both DIY retailers in the third quarter of last year, wanting to get through the spring season. We're actually probably inclined to revisit that over the next couple of weeks and months as we see the market factor in those expectations. This is a great retailer. Operating margins are extraordinarily strong. The capital condition of the company is obviously terrific. So it's a very, very good retailer. The downside of that is that the stock pretty much reflects that, and the valuation is a little bit tricky for us. So we're not inclined to be positively rated on either of these securities at this time.
So right now it's trading at about $37 a share. What's the right entry point, Bud? Let's say for people who don't own the stock.
Well, that I'm going to have to. I think the rules of the game pretty much prohibit me from kind of tipping my hat there. But let's just say it's lower than it is today.
It's lower than it is today. And just for our viewers who haven't been following the stock as much, it's up around 17% over the past 12 months, up around 7% year to date. Compared to Lowe's, though, we've got the earnings from Home Depot. We heard from Lowe's yesterday. You alluded to it earlier. Lowe's essentially cutting its earnings and sales guidance for the rest of the year. CEO of Lowe's saying consumers are upset about not having jobs, still putting off big ticket items, big ticket purchases. We know that hurts Lowe's more than Home Depot. Of the two, which do you like better?
I think Depot is getting better credit for the changes that they have made to their operating model over the last several years, and that's showing up in the stores and in the performance inside of the stores. So if I'm forced to choose between the two, I would prefer right now Home Depot. Both of them, however, are terrific companies, and that could change with the relative valuation of the securities.
But thanks so much for the time. Bugatch joining us there from Raymond James.